Hello, my name is True Demon, and I'm the Devil's Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. Hey everybody, this is True Demon, the Devil's Stockbroker. Really quick one today. Whatever is going on with ticker MULN is extremely suspicious, and I cannot say that I understand what's going on, but the volume candle on this thing is continuously rising higher and higher and higher. On the weekly chart, they've traded over 146 million shares. It's more than 10 times their float. They have a float of 17 million according to the last numbers that I was able to pull off from StockBot, and I just don't understand what's going on. The price is still stagnant. It's sitting at 63 cents, but there's so much volume. I don't understand what's happening. The only thing that I was able to pull up was their S3 filing, and I'll look at that in just a second. I have over here on the right hand pane the short exempts from yesterday. February the 22nd, the short exempts were 4,200,000. I don't understand how this is not being investigated by the SEC. Something weird is going on with this stock. The price is still sitting stagnant, and I want everybody to understand that there's no precedent that I've found yet in the market for what this might mean. But please, please, please be careful if you look at this ticker. I am long in this ticker on a maybe because I'm looking at the short exempt volume, and to me it's so excessive that I feel like there's an opportunity here, but I don't know what's going on. There's something really strange happening to this particular stock, and market makers are doing something to it, or they're caught in the middle of it. I don't know, but there are tens of millions of shares trading hands every hour on this particular ticker, and it's only going up higher and higher and higher. This is the Form S3 filing, which is this particular type of filing is for a prospectus for registration of shares statement. This is whenever a company requests or registers new shares for issuance. So essentially, whenever you see an S3, it basically is a form which states a maximum amount of dilution or a change of shares that are going to be registered with the exchange. David Mickery, the CEO, signed this along with Robert H. Cohen Esquire, presumably their lawyer and underwriter for this particular filing. This is a filing for the potential issuance of up to 228 million shares of common stock. Basically, this is a new filing where they are preparing to issue a tremendous amount of shares. This probably has something to do with whatever is happening. This was signed and dated January 31st, okay? So this came very shortly before the registration statement. There's several things in here that are worth looking at. The main one is that they are preparing to allow or register up to 228,568,886 shares. For brevity, we'll just use 228 million. The offered shares solely consist of 11.39 million shares of common stock issued to David Mickery. So these are internally issued shares going to the CEO, the Chief Executive Officer, and other stockholders. 35.6 million shares of common stock, called the conversion shares, are issuable upon conversion of preferred stock. This has to do with a convertible debt security. We'll get to that later. 148 million shares of common stock, called the warrant shares, are issuable upon exercise of outstanding warrants to purchase shares of common stock. The warrants. 2,454,240 shares of common stock, called the note shares, are issuable upon conversion of convertible notes, and up to 30,927,835 shares of common stock, called the equity line shares. issuable pursuant to an equity line of credit defined below. So there are several things to pick apart here. One, there's the total amount of shares that are issuable in this filing. The common stock that is being offered to the executives and internal and insiders is 11.39 million shares. 35.6 million shares are issuable on conversion. This is a convertible note. The next is 148 million shares for warrants. There are specific warrants. Warrants you can think of as call options, but they're sold by the company. It's a way of creating revenue for the company and getting in funds into the company without diluting the stock right away. The warrants have a strike price. Once the stock is trading at a particular price in the market, the warrants become exercisable, meaning that the company that holds the warrants can purchase those shares out from the company directly for the strike price, and they're entitled to it. The shares, one thing to understand is that none of the shares in this filing exist until these notes and warrants are exercised. So until the conversions or the exercises occur, none of these shares exist. So first we have the 10.7 million conversion shares issuable upon conversion of our outstanding Series B preferred stock and Series C preferred stock. Warrants, except for 1.383 million of them, have an exercise price of $8.84. That's $8.84. That means that the warrants that are discussed in this filing cannot be exercised or issued until the price is at least equal to $8.84. That's the price per share that the company who owns the warrants pays to the company Mullen in order to receive those issued shares. There is also a merger agreement in which pre-funded warrants, that's these right here, 1.38 million warrants, were pre-funded as a part of a merger. This is when Mullen Technologies and Mullen Automotive merged together and just became Mullen. Those are exercisable upon issuance and have a term of 5 years from the date of issuance. These were issued a few years ago, so they have up to 5 years before they expire. So 2026 thereabouts. Currently, 16.45 million warrant shares are issuable under the warrants. There's a lot of potential dilution on this stock that's really important to be aware of, okay? And I know that dilution is a really scary sounding word because it does mean an increase of supply of the shares in order to give the company access to funds. There is a lot of strange behavior going on in the stock that's really important to pay attention to, and that's why I want to fully inform everybody before they get involved in this trade. It's highly uncertain. It's very uncertain. I think that there may be something going on with market makers and potential competitors, and I don't really have an explanation for what I'm seeing between the short exempts and what's happening in the stock market with the price. All I can do is read the filings and try to understand it as best that I can. It's very important that anybody that's looking to invest in Mullen or sees this talk about pumpers that are just pushing the stock up and trying to get people excited about it, there's something else deeper going on here, okay? I don't think that this is just an ordinary pump and dump. I don't think that it's anything like that. There's something else happening here. So there's a securities purchase agreement called the $20 million SPA dated May 7th, 2021, providing the purchase of 29,082,449 shares of preferred Series C stock of Mullen Technologies called the purchase shares at a price per share equal to $68.6877 per share, or a little over 68 cents. And 5-year warrants purchase at no additional cost 75.99 million shares of common stock in Mullen Technologies at an exercise price of 68.77 cents per share. under a proposed revision to the $20 million SPA by mutual agreement of the investor and Mullen Technologies, an additional $40 million of preferred stock with similar warrant coverage may be sold by Mullen Technologies to the investor. The exercise price of these warrants is subject to adjustment in accordance with their terms and further in accordance with Schedule A of Merger Agreement. This is part of the explanation for why the price is hovering below 67 cents. It just hasn't seemed to be able to break past 70. Whatever is happening here with this stock has something to do with this filing agreement, because the price has been hovering around this average for several weeks. It just hasn't really moved. Or rather, it's been pushed down to this price, and for the entire trading week, despite all of this volume, has stayed here. Something bizarre is going on, and somebody is accumulating a huge amount of shares. The OBV is way oversold, and I keep looking at the short exempts, which are just so excessively high that it makes no sense, because there shouldn't even be enough shares in existence for any firm to cover them. Like, just look at the short volume here from today or yesterday. Jesus, the short volume was 19.85 million, and the short exempts made up 4,201,849 of those shares. That's a short exempt ratio of 21, which that's what it's been doing. It's been over 20 short exempt ratio for the last 3 days, and it went over 30 on the 10th. I don't know what's going to happen with this stock, but I have a feeling that there's some plan, something being done here with getting these shares down to getting the share price down to 68 cents and providing all of those shares to the original investors that invested in Mullen Technologies early on before the merger occurred, and that all of these additional shares which are now in the process of being issued, or at least this is my suspicion, is has something to do with that. And now we get on to the $30 million equity line of credit. So Esousa, which is one of the original investors and the largest holder with 9.99% of Mullen Technologies, entered into a securities purchase agreement called the Equity Line of Credit, whereby Esousa Holding LLC committed to purchase up to an aggregate of $30 million or $30 million or $2.5 million per month in common stock over a 12-month period. At the effective time of the merger, the obligations under the Equity Line of Credit were assumed by the company. The number of shares of common stock issued by the company at each drawdown date is calculated by multiplying 125% by the amount of each drawdown up to $2.5 million, and then dividing by closing the sale price of the common stock on the principal security exchange or trading market on which the common stock is listed or trading on the trading day immediately prior to the drawdown. The company shall not issue any common stock under the equity line of credit if it would result in Esousa's beneficial ownership equaling more than 9.9% of the company's outstanding stock. The purpose for this is to prevent hostile takeover and avoid any situation where this company would be legally able to own more than 10% of the company. The company does want internal control, which I feel is interesting, but the language in here does not restrict any outsiders from purchasing up all of these different shares. So if Esousa, this only prevents the company from issuing enough shares that Esousa could directly from the company purchase enough to take a majority ownership. It says nothing about diluting the company to the point where Esousa could buy the entire company's float at that time out of the market. There's nothing to prevent them from doing this. There's no legal precedent for that, and it's not enforceable. So what I believe might be happening is Esousa is putting the company in a position where it is diluting stock in order to provide itself enough liquidity. Esousa is buying it up out of the market at insanely low prices. And if they want to issue their warrants and put themselves in a position to buy out this company, then that could be what's going on. But that's entirely speculation, okay? I'm not an expert and I'm not a lawyer. This is just a offering summary. Basically says the same thing that we read at the top. As of December 27, 2021, we had an outstanding 23.383 million shares of stock. As of that same date, we also had outstanding 15,000. Average anti-dilution provisions. Interesting. So there's one more thing that I'll cover on the filings before we wrap up and move on to the next piece of DD that was done. There's, as a part of the equity line of credit that Mullen received from Esousa Holdings, it is important to recognize that Esousa, in order for them to be obligated to purchase shares for the common stock, the price must be over $3. And they can only purchase $2.5 million in stock at a time. So that is essentially the agreement between Esousa and Mullen. If the price never goes above $3, then Esousa is not obligated to purchase shares. In addition, there is an expectancy and a restriction on Esousa's beneficial ownership shall not exceed 9.99% of the company's outstanding stock. So there is a limit to what Esousa can buy, and there's obviously some planned dilution here. So there is quite a substantial amount of risk to consider. That being said, there is also some substantial opportunity. What I want to show you is a series of relationships between Mullen and a few other car companies that are worth noting. This is Xiantu, who makes the K50. Xiantu, which means future in Chinese, is a Chinese company that is creating high-performance EV sports cars. And they are partnering with Mullen in order to market to the United States. So this is Mullen Technologies Xiantu Motors partnership agreement, which was released on MULNUSA.com, and this is a valid partnership between a Chinese motors manufacturer and Mullen, who has manufacturing and distribution available in the United States because they're based out of Southern California, near Los Angeles. The Xiantu K50 was actually showcased at a motor show at Los Angeles in 2019. We'll get to that in just a second. Now, I know that some people are nervous about Chinese companies, but this car actually does exist. It was showcased and it was reviewed, and it's been in production since 2019. The other thing that I want to point out is that Mullen also has an established relationship with a company called the Durr Group. Durr Group is one of the primary manufacturers and technology integrators that works with Mercedes-Benz, based out of Stuttgart, Germany. So Durr is a leading global company specializing in vehicle production systems, including paint and final assembly technology. They were announced as a partner with Mullen on December 20th of last year. This is the key here. Durr, like I said, exists in Stuttgart, Germany, not very far from the Mercedes-Benz headquarters. These two companies partner with each other. That is known. Durr Group and Mercedes are tied together, right? Best buds. If there is a relationship between Mullen and Xiantu, and Mullen and Durr Group are operating together, then there is a obvious relationship there. However, if you extend out a little bit further and note that Durr Group has a relationship with Mercedes, then we have to wonder, is Mercedes aware of Xiantu and Mullen? And there may be a bit of a love triangle going on here. This is an article that was published in May of 2019 by autoindustria.com, and the featured story comes from Brent Coe, VW, Volkswagen Press, Durr. So this is the little details that matter. If we go down and search Xiantu in this article that was written by this correspondent for VW, they spoke very highly of the Xiantu as they went through this showroom in Shanghai. So this was This was where they reviewed the car after its debut in 2015 at Auto Shanghai, and the very first model of EV supercar called the K50, which is available in both coupe and roadster form. So this is this is a very small mention. Okay, we're connecting some very vague dots, but there's a known relationship between Xiantu and Mullen. Mullen has a relationship with Der Group, who is going to be their manufacturing partner, and Mullen is marketing the Xiantu K50 in the United States on behalf of Xiantu Motors. Der Group handles the manufacturing for Mercedes-Benz. It's not that far of a reach to imagine that Mercedes-Benz may actually be looking to get into this space too. And what better way than to partner with a marketing team that already exists and is creating electric vehicles in the States with a company that's already doing the same thing for a Chinese manufacturer. And because these are very small companies, for Mercedes-Benz, that's an acquisition potential. So I'm kind of putting on my tinfoil hat here, but there's an interesting relationship here between these companies. And just for what it's worth, like just looking at this car and what they're creating, and the fact that Mullen is doing this exact same thing, creating these or planning to create these types of cars, is just so cool to me. Um, so I'm not even a car guy, and I can appreciate the beauty of the design that went into this. So, like I said, there's some very interesting relationships here. The filings are concerning because of such potential for dilution. However, I take note that the the dilution itself doesn't necessarily matter until the price gets high enough for those warrants and for those secured notes to be exercised. And I have just this feeling, this gut feeling, that these companies wouldn't be creating this much volume on the stock if they didn't have some reason to be doing it, and they're purchasing it at a fixed price. Otherwise, why would this be moving? They're selling, Mullen is selling shares and potentially in the process of diluting stock as we speak. But the price has nowhere to go. The company is already selling below $1, and this is purely for acquisition purposes, as far as I can tell. So the downside risk to this, to me, is minimal, and I can't help but be excited. I don't know what the hell is going on with the short exempts though. That one still baffles me. This I cannot understand. For whatever reason, this the excessive short volume from yesterday, and now seeing it so much higher today, with short exempt volume being over 4.2 million. I just this actually, like, if I'm even half right about any of this, then this does actually create the potential for a company that can compete with Tesla. If Mercedes-Benz is trying to break into the U.S. market with a electric sports car, and they have a partner through Mullen that can already do that with a Chinese partner, like that creates a huge opportunity for Mercedes-Benz, who is a company that's in a position to take full advantage. Like this could be like a whole nother Porsche VW situation, you know. So again, this is all just speculation on my part. I'm just connecting some dots, and they're pretty vague. There's some pretty blurry lines, but I'm just trying to be honest about what I'm finding and where my mind is at, what I'm thinking. There's interesting stuff happening here. I don't the short volume, the short exempt volume really does bother me, but I'm going to go ahead and I'm going to hold on to my position. I'm going to see what happens with this. I know that there's no convertible notes that can be purchased until the price is over $3, and I know that the warrants can't be exercised until $8.89. So until we see prices like that, like I don't think that these companies would be creating these terms and these contracts if they didn't actually believe that that was an attainable thing. Something else is going on here, so I'm expecting some news very soon. And yeah, I'm just going to hold. I'm going to hold on, and I'm going to see what happens. But as I warn everybody, please, please, please respect your risk and understand that your risk may be different than mine, and that you should never ever trade on the information that I'm sharing. You should always do your own due diligence and make sure that you understand and that you are doing what's best for yourself. Don't trade on just what I'm doing. Trade based on what you want to do and what's right for you. All that being said, thank you so much for watching and have a hell of a time in the markets.